Good morning, everybody. Thank you for joining me for the Catch the Turn webinar. My name is Joel Dollar. I am the Chief Trader for Catch the Turn. Thank you for getting up and joining me. Hope you guys are having a great trading week so far. The markets are slowly moving. Once again, let's see here. Who got on board today? All right, got a few people on board here, a few new people here. All righty. Let's get down to it. Today, I want to cover the breakdown of the CTT trading platform. I'm going to go into details of each trading lab that we have for you guys. I'm going to go over position, swing, scalp, break down the indicators that we trade off of, break down our verification indicators, and really give you guys more of a solid layout of what this platform has been built to do. Some of you guys hear about Forex, some of you guys want to trade because it's very lucrative. You want to get in, you want to make a change in your life, you want to be successful. I'm not sure why some of you guys are here. I don't know what has brought you here. All I know is that you came here because you want to make a change in your life. That is our goal at Catch the Turn. Our goal is to help train you become successful traders, not just give you a system that you can get a few pips here and there. The whole goal is to be consistent, consistent. I have people that I've known in the past that'll pull 500 pips one week, and then they'll have 3 weeks of just sorry trades. They might win 10, lose 20, win 30, lose 100. The goal is to be consistent on a consistent basis and to teach you how to become traders, not just people who dabble in the markets. So let us go over this platform here. This platform you see here, I'm very proud of. It's a platform that is something that has not been slapped together. It is about 8 years of experience put into one platform here that will allow you to trade the currency markets and provide you, if you have discipline, 85% chance probabilities on trades. This is not a rule-based system here because the Forex markets are random. I don't want to put rules on a system because there are times when things will not line up exactly right, and if you have a rule-based system and one rule is missed, folks tend to not take the trade. We have setups. What we're doing is we are looking for setups, and then we are verifying those setups. Once we verify those setups, we are then placing that trade. So let's break over the platform. We're going to start with the swing trading platform. Why? Because it's in the middle. There's scalping for the advanced traders. There's position trading for those who really want to take long-term trades. And then there's swing trading. Swing trading is more of an intraday method, meaning that I like to close our trades out by the end of the day or by the end of the session, depending on how long I'm stuck in a trade. What you see on the swing trading layout right now are our 3 main trading algorithms here, which is the ocean, which are our blue, red line. Red line means value. We have our entry candles, blue, yellow, and then red, green. And they provide you with a quick visual snap-in of what price is either trending up or trending down. It's very easy. Blue, yellow, we're heading up, which you can see right here. Blue, yellow, we're heading up. Then you have red, green. Red, green, we're heading down here. So when you get a blue, green, or a green, yellow, or a blue, red, something's not right here. We know we have possibly a change coming. Blue, red, green, yellow. Then we have Cobra, the dashed line you see, the red and yellow line. Cobra acts like in a way the same concept of trading support and resistance here. We are waiting for the current candle to break Cobra, such as you see right now. When this candle closes, Cobra is locked in place and we're heading the opposite way, depending on which way the market is going to move here. How far will we go up? Well, it depends on where we are as far as deviation. Once Cobra is broken and Cobra is crossed, price will tend to move up or down, vice versa, being yellow or red. If price were to stop right now where it is and push all the way back down, Cobra then goes back to being red and we did not have a break of Cobra. Cobra forces you to be patient. It forces you to wait. You have to wait for the break of Cobra in order to take a trade. Now, this system was built on the concept that we want a common individual to come on board and learn how to trade. We do not want to make it so advanced to where it's very hard to grasp the concept. We don't want to give somebody a system that will just take off in this blaze and all speed. We built a system that will allow you to crawl before you can walk, before you can run. So the system has options, folks. You can trade it aggressive. You can trade it safe. You can wait for all the verifications to basically tell you, let's get in. Or as time goes on, you will learn to beat Cobra. You will learn to play aggressive. You will learn your own trading style. And that comes with becoming a trader. You will figure out, is scalping for me? Am I a swing trader? Am I a long-term position trader? And those are things we can't tell you, but we can help you get there. We can help you try on your trading shoe. You know, I know people are telling me, well, what's the difference? You know, well, same thing, running. Running is the same. Imagine you're doing track and field, all right? Imagine you're doing the sprints, the hurdles, and the 2 mile. It's all running, but it all takes a different approach. It all takes different training and different things to look out for. Same with scalping, same with swing, same with position. It's all trading, but it takes a different approach, different techniques. And at CTT, at Catch the Turn, our goal is to train you on those to get you moving in the right path to become successful with this platform. So if we're looking for our 3 main trading algorithms here, the Ocean, entry candles, and Cobra. Now for those who are clients, and I know you guys have been looking around, we've added an extra tab, which is a modified tab, because I've seen a few people trade the weekly on the 1 hour using raw candles and a solid Cobra with the kill zone. Only difference is, folks, is our candles that we use are smooth. They filter out the choppy noise. They filter out the ups and downs, the having, you know, seeing a few bull candles and thinking, well, we're moving up. They filter all that out here. So we just get smooth runs down, smooth runs up here. Hence that being said, these being smooth candles, in our guide, we show you what to look for. We want to see solid candles down, which we can see right here. Solid candle down, no wick, meaning there's no indecision. Little wick, a little bit of indecision there. Then we have a tiny body, big wicks, a lot of indecision. Well, we can tell we're turning. We've hit deviation, we're coming back. Same thing moving up. No wick, we're moving up here. Big, thick body, thick body. These candles are smooth, so they do not move exactly with price. Here's our candle, here's our wick, here's price. So by the time we do get a color change and we have turned, we've officially turned. That's why the whole concept is to catch the turn. We want to catch it. Now, the basics behind this platform, behind the CTT trading platform, is nothing new. We trade the deviation of price back into value. What that means is that price, the candles, red line being value, are always going to become in and out of line. The reason being is economic news, financial transactions in the world, the banks swinging the markets. We can see that. We can actually see how far the market has deviated from value with the Ocean. The Ocean is one of our #1 algorithms here, and it's the cream of the crop behind the whole system. Without the Ocean, we have no guide of where price is going. So these algorithms are not meant to be traded by themselves. They are meant to be traded together. These 3, the Ocean, Cobra, and our entry candles, blue, yellow, red, green, are meant to be traded together. Now, if you take one away and trade it, they will fail you. You have to have them work as a team. The Ocean is kind of like a road. It's our guide. It lets us know where the overall sentiment of value is heading. We can see now the Ocean is heading down. As we all know, and I've said in the past, the Ocean is a moving algorithm. The Ocean will shift and the current will move based on where value is heading, and price will then respect that. In the guide, we showed you guys how the Ocean turns. Now, when the Ocean is heading down here, we know we're waiting for our deviation points. What that is, folks, is very easy. We've deviated, we're coming down. We've deviated outside the Ocean, we're coming back up. We've deviated, we're coming back down. The whole concept, when the Ocean starts to turn, we know price has to move down and form patterns, either W patterns, V patterns, and head back up. And it's very easy to read this. And so once you learn to read the Ocean, you kind of know where price is going to be heading. Now, this is the 1 hour. The Ocean will shift on the 1 hour a lot more than it will on the daily and weekly. Daily and weekly, it really doesn't shift as much because those are very powerful charts. Those are very powerful time frames. You will not get to shift as much on the Ocean as you will on the 1 hour. The 1 hour has been set to handle the fluctuations on a 1 hour chart. 1 hour chart, any type of news will move a 1 hour chart. Anything. I mean, it can be literally things that will really shift it and move. So we are looking at the main deviation of price from value. Now on the raw chart here, they're not smooth here, but we can see same concept. We deviated, we're coming back down. Right now we're heading back up. The ocean is heading back down. If we deviate and start coming back down, we're looking to get back in. Now this ocean contains a kill zone. All that means is this space in between the blue and orange line are my extreme deviation points. When we're across that, we're coming back in. We push through, immediately we come back in. Out here on the normal setup here, this right here is actually the end of the kill zone. So once we pull out with a wick or a candle, we are extremely deviated. So it's nothing new. The concept's been around since trading itself. It's just that we've taken a system and have modified it and have built it to help people become very successful at trading, and we have made it a lot better. We didn't reinvent the wheel. We just injected it with just the best trading possible system we can actually get. So we have swing trading chart. Now, one of the main concepts of our system is we use multiple time frame analysis. What that is being said is that means that the 15-minute to the 1 hour, to the daily, to the weekly, and so forth. We are looking at the higher time frame on position trading, and we're scaling back down to these lower time frames because they're going to show what they're doing first. In smaller time frames will always follow the direction of the underlying trend that is actually in place on a higher time chart. What that means is that if the weekly is down, the daily is down, you're going to probably have the 1 hour being down a lot more. Now, as we all know, price moves in 3 ways. Price moves up, price moves down, and price moves sideways. All right. Now, it doesn't move in a straight line. If it did, trading would be very easy. It zigzags its way down, down, up, down, up, down, up. And the problem with systems in the past is trading is all about trade placement. When you get into a trade, it's how well you enter that trade will determine how well your trade will become for you and how successful you will be. Most of us in the past would enter trades right here for shorts. We're selling on these up breaths, these small breaths going up. What that does is, one, your stop loss was too tight. So you enter here, put your stop loss here, and the price moves up and takes you out. And you don't know why. Well, you were on a small up breath. You couldn't see that in the past. We can see that now. Or you'd have a trailing in. Price would move up. Your trailing was too tight. It would follow, and then it would hit you out. So we didn't want that. Or you would enter a short, and your margin would be you'd overuse your margin. You would actually use maybe standard lot 1, and you'd have probably $3,500 in your account, which requires on Euro USD is $2,800, which leaves you very little breathing room for price to breathe. So the problem is you would enter short and price took a small breath up, just enough to force a margin call and then move back down. So the problem in the past was these little breaths up that we could never see. Now we know we can see these breaths. The reason being is every pair has a certain average true range in a day that it can move. It has an average daily high, daily low. I'm sure you guys who are traders have all heard this before. Euro USD, in the past, I've seen it average about 150, 170 for its daily high and low. USD CHF, anywhere between 75 and 80. Pound New Zealand's like 275. They move so much a day high, so much a day low, and these smaller time frames will reflect that. So if you hop on the screen looking for a trade, and we've already moved our max daily high and low, be cautious. I know people who will take shorts right here and who will take longs right here. That's not the concept. You want to trade off the direction of the ocean. The reason why I do not pull these reverse trades back up is you're never guaranteed that ride back up. Now, if I get a strong push out, I'm going to have a better ride back up or back down. But me personally, I will not risk that because why? The ride back up is not that long. I don't want you to get in a trade and you start right here and you only have maybe 2 or 3 hours left to move up, and you get torn up because you didn't enter. You entered against daily. You entered against the ocean. And the reason why I like to trade in the direction of daily, when I swing trade, I might get stuck in a trade more than just a session. I might start off in a trade, the New York session, the trade doesn't move like it's supposed to. Say if I got in right here, I wanted to beat Cobra, even though I didn't get a